Hello and welcome to this week's episode of Nucleus Investment Insights. We're only a few days into the 2022 Australian federal election campaign, but already there's plenty to talk about. Unfortunately, media seems to be focusing more on what the candidates don't know. From ScoMo's lack of knowledge of a payout to a minister's former staffer, to Albo's lack of knowledge of key economic statistics, there's not a lot being said about what their policies are and what really separates them. So today we're going to have a look at the impact these policies could have on the investment outlook. On the agenda, we'll take a look at the history of how we got to this current point in Australian economics and what that means for this election, the policy platforms of the major parties, the soft side of economics, tax arbitrage, and of course the investment outlook of all this. My name's Shelley George, and I'm Chief Operating Officer at Nucleus Wealth, coming to you today from the lands of the Wurundjeri people of the Kulin Nation. And today we're lucky to be joined by none other than our Chief Investment Officer, Damien Klassen. Damien, thank you for having me today.
Yeah, thanks, Joe, and you know, good wishes to Sam, who's sitting by a beach, hopefully at this moment.
Break.
And again, to get weekend.
All right, so some housekeeping before we kick off. Just a quick reminder that if you enjoy our content, please subscribe to our YouTube channel and click the bell below to be notified when we go live or have a new episode recorded. Alternatively, follow us on your preferred podcast platform. Our show is available on all the majors. And for those of you listening live, feel free to drop in questions in the YouTube live stream chat, and we'll do our best to answer them during the show. So now that we've got that out of the way, Damien, let me hand over to you.
Yeah, so what I wanted to do before I get into the impacts, I want to take a step back and actually just look at the sort of 20 years before the latest, before sort of ScoMo's latest election win, and just sort of look at what the investment landscape really looked like over that period and what were the really big policy drivers, because I think that really, for me, very much shapes the outlook and how you should be looking at I guess from an investor's perspective, and very much this sort of top-down view about what does it mean. So a sort of longish presentation that I want to sort of jump into, sort of talking about Australia up till 2019. And, you know, I guess 28 years or something like that, years, it actually reached. Having said that, you know, I've got two graphs here. One sort of showing that sort of no recessions for such a long period. Real household disposable income per capita, and basically that we had 7 years of real disposable incomes going nowhere. And so it basically, you know, that there was a sort of driver in the earlier stages in the 80s and 90s of a lot of productivity reform. In the early stages of the Howard years, you had GST put through, and so there's this real focus on productivity. Post that, you know, there was a sort of right of this the mining boom, but I guess one of the key messages was that on a per capita basis, incomes were going nowhere for a very long period of time. You know, 7 years is an age in economics for it not to get growth. And if you look at the how that sits versus the world, I've just got one up here showing OECD countries and Australia bottom line, the only one with negative growth. Every other country is above zero, and you know, 2019. So, you know, Australia was very much an outlier in terms of what it was doing. It wasn't just that there was a poor economic environment. And so, you know, the question is, you know, how does this come to be? Because what we hear, or what we heard certainly in the run up to the last election, was what a great job everyone was doing, and how fantastic the economy was, and a lot of that all to the question about the denominator, that number of people. So I've got a chart that I wanted to show in terms of population change. What 2007 period where the world went into a financial crisis and Australia one negative quarter. One of the key things that really saved Australia's GDP from that time was massive increase in the number of people. So it went from immigration of close to 120,000, or the average over the prior period was, I think, even below 100,000, and then at a point there, 300,000 people in a year. So you just had this massive influx of people. When people come in and they spend money and they buy houses and they do all these other things, it's very good for GDP, the total size of the pie, but everyone was getting slice as this sort of massive amount of people came through. So that was one thing that sort of saved Australia from inflation. The next part, though, was that there was another push later on in that decade, and particularly under the Liberal government, to re-get that again, keep pushing through numbers of immigration, sort of calling that sort of padding stats in terms of you saying, you could keep talking about what a great for GDP growth, but ignoring the fact that individuals in the economy were going.
So why do they love immigration so much, Damien? Sorry to cut you off there.
Yeah, no, that's fine. So immigration, you love it for a couple of reasons. One is the donors love it. Companies can't get enough of it, and so whether it be your banks, Harvey Normans, all your supermarkets, people like, if you've got a supermarket in a region and you throw in 20% into the same region, then that increases the value of the supermarket you've got there. You've got more customers, or if you're Harvey Norman seeing furniture and equipment, every time some builders generally want to fill it with furniture, and so you've got more people coming in, means you get to sell more, and so incumbent players really benefit from it. They go and make donations, and then
is
get
there
in
a
the ear of the
housing
politicians.
perspective on this as well, in terms of it adds a little bit of demand to the housing market, which at least it keeps your property prices above where they would be without the immigration. And as a voter who owns if you own a property, you're not going to be unhappy about that.
Yeah, and look, the best possible, we spoke before in some of these property podcasts a few weeks ago. The best possible outlook for an Australian property owner is that basically you have a weak economy. The central bank isn't raising interest rates or even lowering interest rates, but it's not so weak that companies start going bust and you start getting, you start going into recession and things like that. And that was probably was it growth down.
Sounds like what we've had over the last 7 years. Like you said, there's not really been any wages growth, but it's kept rates low, and property prices doing all right.
Yeah, booming, absolutely, and that is So if you want high property price, then we're perfect for you. If you want high wages growth, it's exactly the wrong environment for it, because you're throwing more and more people in, and especially a lot of the immigration students who are for at the very bottom of the rung, and a lot of them need to get work in order to get visas and in order to stay here. And what that means is that employers can keep their wages low. And so if you've got that setup where you have an extraordinary amount of people coming in, those people are predisposed to a lot of those people predisposed to lower wages, then you can keep the wages down for everyone. And so it's basically wages, lots of people, get your property prices going, because you can't.
Got it. All right.
The other major factor that saved Australia from recession, the pre the financial crisis, or sorry, just after the financial crisis, the spending in terms of mining capex. So we had this massive boom coming through from China. So China had been for the 10 years before that had been increasingly importing more and more in terms of commodities. They went from being, say, a net exporter of coal. So they used to be one of Australia's big competitors in terms of pushing coal out into the world, to being a net importer so that they started taking Australia's coal. So there's a huge flip around in terms of that, and that sort of built up right throughout the early 2000s. As that built up through the early 2000s, because there'd been such a long mining depression where mining, had just sort of prices had just sort of grown lower and lower and lower. No one wanted to go and put new mines and spend more. And it wasn't until sort of later on in the decade where people were actually, hey, this thing's here, prices are sky high, this is lasting for a lot longer, and there was this huge rush to get out and build more. And so as a percentage of Australia's GDP, mining capex went from about 1%, which is sort of it's the lower level of it seems to keep coming back to, and at one point it was sort of Australian GDP.
Can I stop you, Damien? Sorry. And just check if you're on your Ethernet cable at your end, because I look fine at my end, but having some feedback from the guest that it's not great.
It's bouncing in and out. It is on. It is on.
Okay.
Cable. Yeah. Apologies
well, guys,
for that.
We're really sorry. We'll just have to keep going. I'm not sure we can find the solution today. Apologies, and we'll try and make sure it's better next time.
Yes. So anyway, so I was talking Australian capex. So yeah, so one project alone, which was the Gorgon in WA, that was about 5% of Australian GDP. So didn't come through in 1 year. It sort of was stretched out over a number of time, but the incredible size of these projects, just sort of dwarfed the rest of the Australian economy and really sort of drove through that. So the first thing I spoke about there, the bringing lots of people through, that was a lot of those, certainly during after the financial crisis, was in response to there'd been a financial crisis everywhere. Unemployment was really high right around the world, and Australia had this mining boom going on. So a lot of people sort of coming into Australia to job. I mean, in terms of the mining capex, again, that wasn't a government policy decision to spend lots of money on terms of capex. That was really more about companies deciding that they were going to spend it. There was a sort of tax regime put in place, which helped a lot of the oil and gas projects get up and running. So Australia had has still a petroleum rent resources tax, and that was arguably that was government policy that helped there, and both parties were involved in that. And why I'm sort of giving apportioning credit to both parties is because possibly one of the worst tax things I've ever seen in terms of resources tax. With Qatar in terms of how much we export in terms of and Qatar gets about 20 billion in and about one. So the companies were Chevron, Exxon, BP, all these guys were very much involved in helping shape that.
The lobby's
one stage,
there.
absolutely, and no one talks about it because
why does it help projects get up? Is it less than what they would otherwise been paying if the PR?
They would have paid a lot more.
So, but in Australia, did they get rid of existing taxes to bring this in?
Yes, what they did, and the tax was very much structured as being the higher prices are, the more companies pay. So it's like a super tax in terms of the amount. Yeah, when then the companies pay more, when prices are low, they don't pay much.
But so how does that factor into Australian gas prices? Because obviously that's it's been topical for a while. Does it assume that the Australian market is separate from the international market that they're selling these at, or what?
Well, the ones in the WA, these are the ones in WA. Yes, there's domestic regulation, and it was and so there's lots of gas going out, and I will get to the gas because that's a pretty key one as well. But I guess what again I'm getting to on this one is the companies there as well have roughly 20% of GDP still in tax losses. So if you take the total the Australian GDP and you carve out 1/5 of it, and that's how much money a lot of these companies have sitting in tax losses, so that's they're going to have to make that much money before they actually ever pay tax in terms of this. So
Wow, that's huge.
it was so suppliers, depends on what you want. If you just wanted to build these things, then a great policy in terms of building them. In terms of companies, in terms of Australian citizens sort of benefiting from it in terms of tax revenue and things like that, there's actually very little in terms of that. So and because that they all came at once as well, that meant that then the Aussie dollar, and we'll move on to what that did to the manufacturing sector in a minute. Post that. Okay, so we had this resources boom, and then that faded off, as you saw, in the early 2010s, and what the RBA was left with was this falling demand from that whole resources side. And so what they did was they lowered rates a lot, and we basically created ourselves a housing boom to follow the resources boom. So sort of had this people boom, then resources boom, and then we're on to a pushing boom by lowering interest rates. And
so what have we got left to boom?
Yeah, there was tell. I mean, there's nobody really knows, which is why we've sort of been struggling, and you're looking at both politics without a major sort of productivity changes or major policy changes in terms of what they're out to chase. So basically, I think the whole thing at the moment is just trying to hold the whole thing together again. We don't want it to fall apart on our watch. So if we can just keep holding house prices where they are and not let interest rates rise too much, and keep it going as it is, I think is roughly the plan. The other thing we did do as well, we get trickly, so to get that housing price, had to increase debt. And so I've got a chart there of just showing Australian debt relative to the rest of the world. And so well above Japan, United States, we're a little above any of the sort of major economies, and second only to Switzerland, which arguably has got some issues in terms of the way they account for their debts, and which I'd like to think we're number one, from at least from score there. So
sorry, can I just confirm the chart? Is it household debt, loans, and debt securities?
No, it's the
yeah. Okay, that's sorry. We're coming back to it. Yep.
Yes. Yep. Yes. So the Australian economy. Okay. So next then was what does that mean for? So we've got all these things going on. What does it mean for the rest of the economy? So Australia. Thinking economic complexity is slightly below Uganda and Senegal, them down. And the good news is we've managed to take them over. We've left them in the dust, and we're up to about we're at the mid 70s now, and Pakistan's next list to sort of take over. So the message is that we haven't economy digging stuff out of the ground, and then trading, using that money to flip houses to each other. We've spoken about on a number of cases, that the houses and holes economy. So there's a bit of a common thread sort of leading between all these issues, and the common thread is largely that the things I was speaking about. Governments have a chance to push on them, but we haven't generally. We've sort of let the whole thing slide and just gone, well, we're a small open economy, and we'll just see what happens with the rest of the world, and not really try and push back and try and get policy to drive things. So we've got this this economy that's not very complex. There's another chart. Sectors have been decimated. was the fact that as all this boom going on, that's when the Aussie dollar got so high, rather than doing what the Norway did, where they took the proceeds of that mining boom and stored them off, and then back when what we the policy and policy was given tax cuts, sort of drove the economy even faster. Wages going, got interest rates higher, and so that was sort of we've hauled out one part of the manufacturing part for what is probably a trend, sort of boom, or certainly was a transient boom in terms of the commodity we've recently. But the question is, we have volumes rise, and so yeah, there's so gas. That was what helped drive that commodity boom away. So with gas, I've got the Sydney price going from sort of over $10. At the same time, has basically been half gas has been. So, and I spoke about this whole team effort between both Labor and Liberals to give this resource rent tax up and running. It was also a team effort for them in terms of getting in terms of not having domestic gas reservation. So pretty much every other country that puts in that has large sources of energy and gas, they have some sort of domestic reservation. So they basically say, well, we want cheap energy for our citizens first, and then once that's been satisfied, then we can export whatever's left over to overseas. The US, for example, wouldn't end on exporting oil from lifted some of those energy.
Gas.
Yeah, so the US, for example, doesn't for years banned the exports of gas and oil from, and they've only just lifted those. Western Australia put in a gas reservation policy where gas needed to be delivered locally first. A certain amount need to be reserved for local use, and then the rest could be exported. And their gas price is about half of what you see on the East Coast. The problem we had in the East Coast is that the companies convinced the government that this wasn't necessary. Gas reservation. We've got so much gas, it doesn't matter. We'll always have plenty, and so you don't have to worry about reserving it. And so they didn't, and lo and behold, the companies weren't telling the whole truth, and so yes, so East Coast of Australia is facing gas prices that are sort of triple what they used to be, and or more, and more than double what we see in WA. And so that meant that again, that whole anyone doing the things like fertilizers or companies sort of relying on gas, manufacturing companies relying on gas as an input, went from being Australia being an attractive place to build these plants to being a very unattractive place. And so that sort of also helped to sort of hollow out the whole mining sector. So we see a lot of both sides of politics turning up at in high vis and hard hats, and going to all these manufacturing places. Both sides have been pretty instrumental in terms of hollowing out that whole sector. But that neither side wants to talk about it because they're both involved, and so it's a broad policy. Better if you just nobody mentions it. The other one we had was international students, and we spoke a little bit about the whole immigration side, but Australia, in terms of the amount of international students, is just head and shoulders per capita, is just head and shoulders above any other country. So a whole, and I guess there's a number of different arguments. We had Salvatore Babones on a couple of weeks ago, talking about this. He's written a book about the whole structure. But I guess the general story is it looks a lot like a backdoor into citizenship rather than the genuine, export industry as it often likes to get coined as. And the issue for a lot of people, especially a lot of the the non-Chinese students is they tend to come out here and work for the and work and help try to pay off the degree as they go. And so a lot of what they do gets classed as an export, but it's pretty hard to understand how an international student who comes here and pays for the housing and accommodation and the studies with the money that they're earning while they're working here. It's pretty hard how to see that as an export. It's so there's sort of a fair amount of questions about how things get measured within that. So okay, so this is our history up to 2019. So
before we move on, can I actually ask you a question about each of the topics we've just looked at, which is it feels a lot to me like, this is obviously just my thoughts, but a lot of the situations we're in that you've talked to have felt more like boiling frog scenario, as opposed to one party or both parties decided that we specifically wanted to get to this outcome. For each of them, immigration, resources, housing, manufacturing, gas, and international students, can you give us a comment on whether you think that the policy
are they passengers or drivers? Is that what you're asking?
Yes. Thanks.
I think we've got a lot of passengers. Yeah, I think we've got a lot of passengers who are basically reacting. There's no plan to do any of this. I mean, the plans for the last 10 years, you've heard. I'm trying to remember what. I'm sure Abbott had a 3-word one for innovation about how much, how we're going to do all this stuff for manufacturing, and Turnbull certainly did, and Morrison has as well, about this whole thing of we're going to turn around the whole innovation. We've got all this innovation economy and we're going to drive it all. And, there's some impressive slogans and some impressive, artwork on the announcements, but there's no actual genuine policy to try and drive that. It's basically saying, well, if that happens, we'll certainly claim credit for it, because we want it to happen, but there's certainly been no genuine structural push to help any of that go along.
So it's like when a company says they're going for growth, but they don't outline any plan that they have to achieve that.
Yeah, that's right. So if their sector happens to grow, the sector they're in happens to grow, and they do well, the management will certainly claim responsibility for it and say it was our brilliant strategy. But these aren't. Yeah, it's not like they've said identified, here's another sector we want to move into. That's a growth sector. We're going to structure things to make sure that that's where we grow and will benefit from it. Yeah. So I would very much describe that there. I mean, the only one you could describe as I think the gas boom, you could certainly describe that as a policy led. It was in maybe a third of it. I mean, the fact we'd found the gas and it was there and it was relatively accessible and all those types of things was the bigger issue. I mean, so you needed that first. The final third of that, though, the fact that we gave such a generous tax incentive to all these companies to get out and develop it. I mean, that was that one
feels like an own goal anyway.
It does, because it was at the same time that all the iron ore was booming and everything else, and so it was just it all happened at once. Yeah.
All right.
So
thank you.
Yes. But I think so I've got a bit of a summary of it here. So lots of reforms in the 80s and the 90s. GST reform in the early 2000s. Then the later 2000s and the mid 2000s was all about spending that Chinese boom in terms of middle class tax cuts and hollowing out our manufacturing sector. We moved into a people boom. Then we moved on to a resources capex boom, and then we're back to the people and a housing boom by lowering interest rates. And then that sort of brought us to up to 2019. Pretty much for most of this, we've had the pandemic on, obviously, but it's been all about spending and propping up the economy. But I would largely say that both both policies at the moment is just don't let the bubbles pop. Just try and keep things going and until let me get through my turn of government, and then if things need to be fixed, then hopefully that'll be somebody else's problem.
So maybe we need to make the terms longer. Probably
maybe we need to pay them more. I don't know. But anyway, we could spend a whole podcast. We could spend the rest of our life talking about how to fix things. But I guess now let's get to what are our policy platforms from both sides of the government at the moment. So I've broken it up into a number of different categories. One is the sort of debt, government spending. There's really not a lot of difference between the two. there's lots of debt out there. The debt is they're winding back a little bit in terms of government spending, but not much. So there's not a lot of real difference there. Both are looking at a review into the RBA, so again, no real difference. In terms of foreign affairs, I think you'll probably find Labor would be slightly more China friendly, but it's really not a lot of difference again. We're splitting hairs in terms of it. It's pretty much the same. The same outward facing. I guess staying close with the US, Europe and the UK, and sort of starting to diverge from other countries. In terms of health, aged care, education, look, there's definitely different spending within those. And there's the sort of pitch about, is it all about TAFE or is it all about apprenticeships and things like that? But it's shuffling deck chairs. There's no reform of that. Or no meaningful reform, and so really it's just a matter of which flavour. Do you prefer chocolate or vanilla? You're getting something very similar, but you're still getting ice cream either way.
We can't be unhappy about that, can you?
No, but I think there's I think
well there.
Yeah, well, I guess I'd like to think there's scope for reform within a lot of these. I think we've had probably at least a decade and a half, probably of very limited reform in terms of it. It's just things have just been allowed to build up, and so I think there's certainly scope to I won't go too much into individual policies, but there's certainly scope for reform within each one of those categories that would help drive some productivity elsewhere. Within so the next one, childcare, not a lot of real difference. I mean, Labor's certainly targeting lower earners, whereas the Libs are trying to give more to higher earners. But there's support for childcare from both. Tax reform, there's very little tax reform. Any tax reform that's been floated in the last, so basically in the last 3 years has been shut down almost immediately.
I got scared off the last election, Labor Party.
Absolutely.
Probably
Labor
scared
Party,
the Liberal Party too.
Yeah, that's right. Labor Party went with an ambitious slate of tax reforms and lost the miracle election, and so that just means nobody's got any interest in tax reform. Immigration, again, there's slight differences between how they're doing it and how it's termed, but both parties want to reboot that immigration, and that's sort of the net effect of that is keeping wages low. If the immigration comes, that's my only disclaimer there is to date it hasn't really come, and there is a potential that it might not come for some time, but both have ambitions there. Inequality. So we speak a lot about inequality in terms of our investment outlook, in terms of when we see a drift towards less inequality and more stable, a flatter earnings, then what you'll see is greater demand. So one of the things covering that whole 2010 to 2020 period was that we had this really weak demand, which was why part of the reason why interest rates could be kept on getting cut. And part of that reason is the more inequality you get, the more wealth sort of accumulates at one end that are not going to spend it. They're going to save it. The richest people tend to give them an extra dollar, it goes in the bank, whereas the poorest people, you give them an extra dollar, it tends to be spent. And so I think the Labor Party certainly talks about improving the inequality, and they've got a few things that sort of will reduce the inequality, but they've also got a bunch of pretty big tax cuts coming through, which is driving that inequality even further.
I mean, historically and idealistically, the Labor Party would be more inclined to work in that area, but after the last election, they're not sure that the electorate is that amenable to voting on these sorts of issues, and so I guess trying to get into power, it seems to me, and then maybe once they have it, they can start thinking about these things.
I was actually going to make a similar comment. I mean, I think a lot of this, I think there's a lot of hopeful Labor voters in terms of saying, "Oh, this will, yeah, they're just saying this so they get into power, and then once they're in, they'll actually be able to do some of this stuff. Look, maybe they will, maybe they won't. I just know from what they're talking about is, from an economic point of view and an investment point of view, none of these things are moving the needle in, whether you're going to, you've got one party promising to spend a whole bunch of money on apprenticeships and the other one party promising to spend a whole bunch of money on TAFE. It's targeting the same bit. Yes, it's a slightly different policy in either way, but it's not moving the needle in terms of what happened. It's very different to last time where you had one sort of saying we're just going to keep everything the same, and the other one saying no, we're going to make some large and potentially productivity boosting changes to the tax system. Now there's pretty much nothing between it. Corruption. So look, Labor is going to do more on that. It's hard to say how much more, and I've got a few charts. That's the next few charts on some of the slides, because I think there's certainly longer term issues in terms of corruption, and Australia's sort of been very much sliding down the rankings. So I'll move on to that a little bit more in a minute. And then climate change. I think the biggest positive would be that Labor would probably stop blocking the states, but they do have different targets. They've certainly got more ambitious targets, but again, we're not talking. It's not a massive difference, and I think a lot of the things that are being driven in terms of the amount of investment into that sector is generally coming from private companies, and there's been a lot done by state governments, and really the major factor in terms of from a federal perspective is the leaders have largely been sort of blocking or making things harder for some of the renewable companies. So I think Labor would stop that, but it's not like they have these policies out there that are going to dramatically change and are going to be dramatically different to what the Liberals are doing. So so the net effect of that whole picture is there's really not a lot of difference between them. So, but let me do the corruption bit first, the soft side.
Next slide.
Yeah. So the CPI, which is a poorly named, but
it sure is.
Corruption Perceptions Index. So this is Australia's corruption perception from 2012, when we were pretty much one of the top rated countries in the world for perception of corruption, and now we're well down the list. I think we're level pegging with Hungary, who's got Viktor Orban, who's just been voted in and a sort of close friend of Putin, and a number of quite serious question marks being raised about his government and what they're doing. So that's the company we're keeping at the moment. Now, corruption doesn't cost you much at the start. As you start becoming more, as you go from a country that's not perceived as being corrupt to one that is perceived as being corrupt, is that the initial stages you're still living on the goodwill of Australia's a good place to do business, and it's open and it's fair, and all that type of stuff. It's a question of when do you reach that line where all of a sudden it becomes, oh no, this is actually turning into a banana republic, or this is turning into it's all about mates, and you actually lose that. You lose the benefit of that trust within a system. You look at places like, a great example is you have an earthquake in Japan, and the roads are decimated and all this type of stuff like that, and you go back 6 months later and the whole thing's been rebuilt. Or you have an earthquake in Haiti or somewhere that's quite poor, and 10 years later, and still there's still roads and infrastructure that still hasn't reached back to where it was. And a lot of it is this idea of trust within a society, is that there's trust of ownership, and there's trust of businesses to be able to bid on contracts and not have to, and to be able to win them fairly. And so as a big picture, these things matter, like when you look at them in the long term, but they sort of don't matter until suddenly they do. And so I think in terms of corruption side, Australia is starting to get to the stage where it's like, well, at some stage this is going to matter. And so is that 3 years away or 5 years away or 20 years away? Nobody knows. But it is worth noting that we're very much slipping down the scale. And you can see that in government trust as well.
Before you go on to the next point, Damien, in terms of
Mm.
turning that around, so you don't know when it's going to cause you a problem, but okay, once you decide this is causing a problem and you decide to turn it around, is it a similarly long time that it takes to change those perceptions?
I think I think from Australia's point now, no, I think we could turn it around quite quickly because we've got sort of this longer term view of Australia being quite a, um, 10 years ago, we certainly weren't thought of as a corrupt place. We were one of the best in the world. Um, and so from that perspective, yeah, I think that could turn around really quickly. But if it gets to a certain stage where reputational damage gets done, I think there's certainly places where it's considered, pick a country like, say, in India or China, where I think there's pretty broad expectation that there is corruption. Is that even if they did improve quite dramatically over a 3 or 4 year period, I'd expect it to take decades before people would actually start saying, "Oh, actually, no, yes, it used to be corrupt, but it's not corrupt anymore." Whereas Australia's sort of got that opposite problem.
Thanks.
And that sort of goes through into this trust in government side as well. So I've got one here from 2010. Australia is the dark blue line, fourth from the top, and trading very much as citizens within the country trusting the government. And then if you look at 2020, we're right back down into the middle of the pack. So we've fallen dramatically from where we were 10 years earlier. So look, and again, this is just one of those ones you don't know. It doesn't matter until it does. And so I guess from that perspective, we are being offered something slightly different. I think how different, we've got no idea. I mean, certainly, I think it's safe to say, well, I don't know. Actually, no, I won't make any comments on that.
Well, I would say there are certainly questions around both sides.
Yeah, there are.
I don't know if we want to go deeper than that, but from an institutional perspective, it does sound like Labor want to do more than the Liberals have done in the last 3 years, but who knows?
But Libs obviously promised anti-corruption coming in and never got up. So I think there's certainly and I think there was certainly we certainly got not a lot of accountability. There seemed to be a lot of ministers who did things that seemed to be very at least walking the line in terms of corruption, but still managed to keep their jobs and just keep on going. And I think there was a lot of that. A lot of it has become is becoming institutionalized. Yep. And so I guess the danger there is you quite possibly you're looking at a lot slower economic growth.
Sorry, I was going to say it's a very interesting contrast to Turnbull, who seemed to be a lot stricter on trying to avoid the institutionalization of this in quite a short amount of time.
Yeah, but we're going 2010 to 2020 here, so he's
part of that. Yeah,
he's part of it. Yeah, absolutely. Yep. And that corruption's perception index, it flatlined for probably a lot of his term, but it's still headed down. Like there wasn't it's
didn't improve it. Got it.
Yeah, and part of that's the a growing part of that's the whole housing market in terms of 2001 had these terrorist events, and shortly after that, there's a whole bunch of anti-money laundering things put in place, but we need to stop money laundering and prevent it from ending up in the hands of terrorists. And that went through a whole bunch of systems. The financial markets went through it, and accountants and all these people went through this whole. Banks all went through the how do we stop money laundering. The Australian property sector. They set up what they were going to do, and then they delayed it, and then they delayed it, and and every year there's a new, every time they go, we just need to have one more look at it. And so now it's pretty well, it's one of the key spots for money laundering in the world is the Australian property market. And that's the type of stuff where, we've had 20 years well, close to 20 years of just delay and waiting and not putting it in, that just grows and eventually get a reputation. You want to launder money. Well, the Australian property market is a good place to do it.
Mm-hmm.
So tax arbitrage. So this is usually where one of the things that most people look at. Okay, what's in it for me? It's basically the idea is that, and last election there was a lot of tax arbitrage. Depending upon what you're doing, if you're relying on franking credits, absolutely vote Labor. Vote Liberals and don't vote Labor, or relying on negative gearing, or you're just an ordinary person paying your tax, then you're sort of saying, well, it's better for me to vote Labor because the people with trusts and franking credits and negative gearing are going to pay more tax, and you'll end up paying less tax. This time around, it's pretty hard to tell. Like if you've got kids, there's a childcare arbitrage, but basically, so if you're
young kids only, right?
Young kids, yeah. So if you're a high earner with young kids, you'll do better with the Liberals. If you're a low earner and you've got kids, you'll do better with Labor. And at some point there's in the middle, but it's very hard to tell the difference between anything else. And everything else just seems to be pretty much the same. Maybe if you're depending upon your family trust and a few sort of let's just say weirder structures in terms of getting lower tax rates, then I'd say and that really matters to you, then you probably should be voting Libs. But it's only been broad motherhood type of statements from Labor about saying what they're going to do there. So it's hard to tell if there's any real change. So really, the what's in it for me is there's very little difference between the two. So question of the week. I'm going to move to that one, and then we've got a few answer questions. Then we'll do the investment impact of.
All right. What would be the investment impact of a Labor government?
Yeah. So. Yeah. So sorry, I'll let you.
Oh no. Okay. Well, as each week when we have our viewer question of the week, we'd love to hear your thoughts. In the YouTube chat, you can put them, or even if you like to send them in to us, have a chat amongst yourselves, and we look forward to hearing what you think.
Right. Now, investor questions. Not sure if we've got. There's lots of comments. I'm just trying to dig out a few questions here.
I haven't seen any yet, but I might have missed some at the start.
Yeah. I guess one of the things, obviously, we should say is anyone who can get better internet connections.
Please get in touch.
I am really close to Melbourne CBD, but it is a little bit embarrassing. Sorry about that, everyone. There's no, I think there's lots of comments, but I don't think we've got a lot of questions there.
Maybe do a last call for questions, and if any come up while you're talking through the implications, we can circle back.
Yeah, yep, sounds like a good idea. Right, so the investment implications. Look, and there's not a lot. I think that the main thing to think about is that Australia is a small, open economy, really dependent upon world growth. So I think the main message that I wanted to get out of that whole history and the background that I did on in terms of the Australian economy is a lot of the time the politicians are a passenger, just sort of what's happening, how am I going to react? World growth slowing, world growth speeding up. What can I claim credit for? What do I have to deflect blame for? It's really hasn't. If you're in that position, it is more difficult to sort of drive things in a particular direction. It's certainly possible, through reform and targeting particular sectors or tax breaks or whatever it is. There's certainly lots of things they can do, but for the last sort of 15, 20 years, they basically have decided not to. And both parties, this is from both major parties. So, and I guess the question is, what would happen if there was a hung parliament? So that we got a lot of these, a lot of the independents that are sort of looking at knocking off a few Liberal seats. What would happen if they sort of held the balance of power? Well, I think certainly we get more done on the renewable side than, and sort of the energy sector would certainly be something that's sort of ripe for reform. But that, I think it'd be very difficult and the corruption side. And I think on the corruption side, you'd certainly get a lot more done if they get the balance of power. But that, I think it's hard to see how there's you can see any major reform in this next sort of 3-year period. I mean, I think the best hope for people who are looking for reform is that you get either a hung parliament or a Labor-driven parliament, and that Labor uses this to create their next stage of reform. I think if you do get a Liberal government again, it's probably a stamp of success on the no reform policy, and they'll probably just stick with being a passenger and sort of managing the economy from a day-to-day basis without really having sort of a driving force about what's going to how they're going to try and shape it. So if you do think it's going to be a return to this sort of 2015 to 2020 that we saw, so trying to push inflation, trying to push inflation, trying to just hold everything together, not keep enough government spending that things don't fall apart, but not so much that interest rates have to rise too much, then we're looking at this sort of buy bonds, buy international mainly, in terms of saying, look, you can't see it. The performance within Australia, really is a matter of working out what's happening in the world economy. And if you think the world economy is going well, then there's an argument to get in and buy Australia. But if you think the world economy is starting to slow, heading for recession, as we sort of put our six indicators of a recession out last week, then the idea is getting your money into something that's not exposed to the Australian stock market, or not as exposed, and really international equities are one of the bigger ones, but also looking at bonds with a view that, look, there'll be the right time to buy Australia again, but generally it's not when you think the cycle's peaked and coming down. It's when you think that the cycle's getting close to the bottom rather than close to the top. Anyway, I might leave it at that unless...
I can't see any questions that have come in as you've gone through that, but we have a little bit more time, so I was wondering if you might indulge you on a couple of points. So the first one, a shorter one. I noticed your last point there is if you think this is the dawn of the golden era.
That's right.
And I was almost fell out of my seat because I hadn't seen that slide until right now.
Well, I don't know. I have. I think I wrote that, and I was like, well, I don't know. I haven't really thought about that way.
But actually, I don't. I haven't.
You're on your own. You're on your own if you
in that sense. I don't think you believe that that's a very high probability, and so
no, that's right. Yeah, so
I do have a question for anyone who does listen to this podcast. If you do think we're at the dawn of a golden era, I'd love to hear from you, because I can't see how it could work, and I'd love to have a bit of optimism right now. So if you do have that view, please get in touch with us on the YouTube channel or contact at nucleuswealth.com. I'd love to hear your thoughts.
I can certainly give you a scenario for it, and look, there is. There are some scenarios that could give us a golden era for the next 3 years. So the scenario would be, so China's in lockdown at the moment, and they've got these 3 red lines that they're pulling back on their property sector to try and limit the amount of commodities, and that they turn around and say, you know what, stuff it. It's somebody else. We'll worry about it in the next 5 years. We're going to spend as much as we can, and we're going to rebirth our property boom, and that's what's going to drive us out of the pandemic downturn. So if China decides to do that, then it's happy days for Australia. Energy prices are headed up,
though, because that's really exciting short term, but all it's doing is kicking the can down the road.
Oh, absolutely.
On
terrible policy.
Serious structural issues. So
terrible policy. But
it doesn't make me feel excited.
But you can make that statement ever since 2011. That was the wrong thing to do, and they kept on. They've had 3 or 4 goes at it. They do seem very, very serious this time, and we keep writing about that the 1,001 small things they're doing but none of them are the big one, which is those 3 red lines, and just throwing as much credit into that property sector as they can. So that's your best hope. And obviously there's there's that. So your best hope is that, mixed with sort of sanctions and in Russia continuing, and Australia having gas, having oil, having wheat and things like that to ship. Potentially you get a big spending in Europe at the same time, so you get sort of massive spending in Europe. Maybe things slow down enough in the US, you can get some sort of infrastructure plan through, and off you go for world growth. But I just don't. Yeah, that
So
doesn't
do you
look like
think
it.
that Europe might stimulate in reaction to energy prices?
They're absolutely going to stimulate.
Okay.
The issue we've got with it is just capacity wise and speed and capacity. So there's in our sort of investment view in terms of what's happened in terms of energy over the last few months is that energy's gone from there's this sort of medium term sort of need for gas, and renewables are sort of gradually going to tick up, and we'll sort of there'll be this slow transition across until the economics get better, and then maybe things will speed up. I think that's out the door now. The economics have suddenly got way better because gas prices have gone so high, and even if gas prices fall back, the prior highs are in everyone's head, and so Europe is now desperate to wean themselves off Russian gas. It's going to take a while to get there, a considerable period of time, but it's gone from a yes, we'd like to do this, yeah, we should get around to it sometime, and gradually work to it, to now this is a major imperative, as fast as possible we need to move across. And so I guess from all the horrors that's sort of been inflicted upon the world by and the problems in the Ukraine, is that I do think this has sped up the switch to renewable energies by years, by if not
Yep.
not a decade or so. So
That's huge.
that's right.
We have a question. What is the first thing to do to address the Dutch disease? Thank you, Robert Mayer, for your question and your comments throughout the day.
Yeah. So just to say, look, what you'd want is some sort of fund. So similar to Norway's sort of shown exactly what you do is you set yourself up a government fund. You tax them properly, and then you take the money from that and you stick it offshore, so that the Australian dollar doesn't push up too high. So while the commodity boom's on, and then as the commodity boom fades, then you start bringing the money back, and you spend it on education and improving. So basically, what you don't want to do is take all these rivers of gold from a commodity boom and then pour it back into tax cuts and juice the rest of the get everyone spending all this money as well. Exactly, you don't want to do what we did last time. You want to get that money away from, get it offshore, keep the rest of the economy alive, and then start to filter back in. So, I mean, there's a pretty reasonable argument now that iron ore is certainly or iron ore and coal and gas, they're all at levels which are not sustainable. And we should be taking the extra revenues we're getting from those and putting that into some sort of sovereign wealth fund, to keep the keep the Aussie dollar lower and keep the rest of the economy going the way it is, and then bring that back later.
All right. We're not really getting there in time, but I did actually want to sort of like as a little bit extra to the podcast. We were having an interesting discussion this morning when you're talking about this balance of power and how that was really the number one thing that you wanted to see to, in terms of, I guess. I've gone blank on the word now. Policy reform. And so, I mean, would you indulge us a little bit by sharing a bit more of your thoughts in that aspect?
Oh, look, I think, I guess what it is that the tough thing from this, the really tough thing from this election is, if the Libs get voted back in again, it will be a huge stamp for them saying, "Hey, just keep things the same and just try and keep." It's now an endorsement of the policy to just try and stay in power and just not do anything. Do as little as possible and just try and stay in power.
Mm-hmm.
If Labor gets in, it's an endorsement of don't try and do any reform. Just try and just be a small target and use that to get into power. Now, I guess that's why my hope is that you get something where you get the balance of power held by some of these independents and people who actually have a plan on trying to do things. Firstly, because I think they will push through some changes to to climate policy, then I think they'll also push through some changes, or they'll stop the impediments, and they would also push through some anti-corruption ones, which I think both extremely important. But hopefully as well, that would also send a message to the other two parties, that the two main parties, that okay, maybe next time we actually need to have some sort of plan for the country and something we want to do, rather than just be in power. So yeah.
Right.
So I guess from my perspective, I'd be worried if it was a Labor landslide. I'd be worried because it's then basically saying to them, please don't have any policies anymore. You tried to have policies for Bill Shorten and you lost, and now you didn't have any policies, and so, or you basically were Liberal policies minus or 1% or plus 1%, and you got a landslide victory. Therefore, that should be what you do forevermore. And same for Libs. If the Liberals get back in from here, it will be same thing. So hung Parliament, and hopefully it means next time around we might get some policies and some changes. Yeah. But keep in mind that investment implications, really means we're dependent upon what the rest of the world's doing. I guess that's the main one I want to push back from that investment implications is there's so little happening on our domestic policy front that it depends upon world growth.
Okay, thank you. So we might wrap it up there. Damien, as always, thank you for sharing your thoughts today. I know I got a lot out of it. Hope the listeners did as well. And to the listeners, thank you so much for helping us through our technical troubles. We greatly appreciate it. Okay, so feel free to, as we said earlier, post any thoughts you have on the question of the week or the episode in the various channels. And we also welcome any feedback you have on the podcast, especially in regards to suggestions for future topics. So if you have any ideas, please, you can send them through to us, YouTube comments, or email us at contact@nucleuswealth.com. And just a reminder, this is general advice and does not take into account your personal situation. So if you would like to discuss your personal financial situation, you can do so by giving us a call. You can find our number at nucleuswealth.com, or you can also book a call there with Sam Kerr, our Senior Financial Advisor, or give us a call directly and chat to Eileen. If you liked the video, don't forget to give it a like so you can help the show grow. And if you'd like to see previous episodes, you can do so on YouTube or at nucleuswealth.com/content. And that's it from myself, Damien, and the rest of the team at Nucleus Wealth. Thanks for watching, and we look forward to seeing you next time.